Hello, friends, and welcome to e-classroom of Ahmednagar College, Junior High. Once again, we are here to study our interesting subject, that is bookkeeping and accountancy. Since last some lectures, we are studying about analysis of financial statements. In that, we have already studied about how to analyze financial statements because it is very important to analyze those statements. Only from those statements we could not uh, get full information about percentage, about ratios, about comparison of those statements. And that is why it is necessary to analyze those statements. Okay. In some previous lectures, we have studied about how to analyze the statements, how to compare the statement, how to prepare comparative statements. Then again, in last lecture, we have started about the ratios of various ratios. We have to study about various ratios, that means ratio analysis. Last lecture, we have studied about ratios such as balance sheet ratio, in that current ratio and liquid ratio. Now, in this lecture, we are going to study about income statement ratio, in that gross profit ratio, operating expenses ratio, net profit ratio, and again in combined or mixed ratio, in that return on capital employed, that means ROCE, and return on investment, that means ROI. मित्रांनो, आपण अनालिसिस ऑफ फायनान्शियल स्टेटमेंट्स मध्ये बरीचशी माहिती आतापर्यंत पाहिलेली आहे. कंपॅरेटिव्ह स्टेटमेंट्स पाहिलेले आहेत. त्यानंतर आपण या भागामध्ये क्लासिफिकेशन ऑफ रेशिओ, मागच्या भागामध्ये सुद्धा आपण बॅलन्स शीट रेशिओ मध्ये करंट रेशिओ आणि लिक्विड रेशिओ याचा अभ्यास केलेला. आता या भागामध्ये आपण इन्कम स्टेटमेंट रेशिओ म्हणजेच ग्रॉस प्रॉफिट रेशिओ असेल, ऑपरेटिंग एक्सपेन्सेस रेशिओ आहे, नेट प्रॉफिट रेशिओ आहे, त्याचबरोबर कंबाइंड ऑन मिक्स्ड रेशिओ, त्याच्यामध्ये रिटर्न ऑन कॅपिटल एम्प्लॉइड ROCE आणि रिटर्न ऑन इन्व्हेस्टमेंट ROI याच्याबाबत माहिती आणि ते रेशोज कसे आहेत, कशासाठी आहेत, याबाबत माहिती आपण पाहणार. लेट अस स्टार्ट. In last lecture, we have already studied about balance sheet ratio. In that current ratio, the formula is current assets divided by current liabilities. Okay. For that, we must know about current assets and current liabilities. We all know about those current assets and liabilities because we have already studied it in 11th standard also. Okay. Then balance sheet ratio. Okay. In that, uh, one example is given of current ratio. You can see current assets, debtors, stock, and loose tools, and total of current assets is 1 lakh rupees, and current liabilities, creditors, bills payable plus bank overdraft. Okay, total of current liabilities 60,000. We know about current ratio, current assets divided by current liabilities. Okay, so 1 lakh, current assets are 1 lakh and divided by 60,000. So it will be 10 upon 6. That means 5 upon 3. So the current ratio of current ratio will be 5:3 in this example. Okay. So let us proceed. Liquid ratio, quick ratio. We have already studied about it. Okay. Liquid assets divided by quick assets. Okay. Now in this lecture, income statement ratio, or we can say turnover or margin ratio. That, let us see first gross profit ratio. That means ratio of gross profit. Okay, this ratio will measure relationship between gross profit and net sale. Now, what is gross profit? आपण ज्याला ढोबळ नफा म्हणतो, ग्रॉस प्रॉफिट म्हणजे काय नेमकं? नेट सेल्स मायनस कॉस्ट ऑफ गुड्स सोल्ड. ओके. देन कॉस्ट ऑफ गुड्स सोल्ड म्हणजे काय? ओपनिंग स्टॉक येणार त्याच्यात, प्लस परचेसेस प्लस डायरेक्ट एक्सपेन्सेस and minus closing stock. It will be cost of goods sold. Gross profit is equal to net sales minus cost of goods sold. Okay. Then net sales म्हणजे काय? सेल्स मायनस sales return. Net sales means sales means sales without excluding sales returns. Okay, so sales minus sales return means net sales, and the formula for gross profit ratio will be gross profit divided by net sales into 100. Okay, so here, for the purpose of operating expenses, expenses which are incurred by the business for routine operation. Okay, it will be called as operating expenses. And non-operating expenses included loss on sale of fixed assets, which are not routine expenses. Okay, such as loss on sale of fixed assets, loss on fire of goodwill, or goodwill written off, or discount. Okay, all these are the examples of non-operating expense. So for gross profit, let us see one example here. Gross profit is rupees 1 lakh. If net sales is rupees 20,000, then what will be the gross profit ratio? So we have the formula of gross profit, that is gross profit ratio is equal to gross profit divided by net sales into 100. So gross profit we already have 1 lakh rupees. Okay, divided by net sales. Net sales are 20,000, 20 lakhs rupees, and into 100, and the ratio is 5%. It is measured in percentage. Okay, then next it is net profit ratio. Then we can say about the net profit, that a net profit, it is overall net profit, and the ratio formula will be net profit divided by net sales into 100. Okay, but there are two types of net profit. We can say net profit before tax. That means before levying a tax on net profit, it will be net profit before tax. Before tax means PBT, before profit before tax. Okay, then the formula will be net profit before tax divided by net sales into 100. And second thing is net profit after tax. That means deduction after tax. Okay, so net profit after tax divided by net sales into 100. So here we can see one more example about net profit ratio. So net profit rupees, if net profit is rupees 2 lakhs, net sales is rupees 30 lakhs, then the percentage of net profit will be net profit ratio is equal to net profit divided by net sales into 100. So net profit is 2 lakhs, net sales will be net sales are 30 lakhs into 100, and we got the percentage of net profit to net sales, it is 6.67%. Okay, then operating profit ratio, meaning operating profit ratio indicates the relationship between operating profit and net sales. It usually expressed in the form of percentage and known as net operating profit. The formula is operating profit is equal to operating profit divided by net sales into 100. Okay, whereas operating profit is equal to gross profit minus operating expenses. Okay, and net sales, we all know that sales minus returns, sales returns or allowances. Okay, then operating ratio, it expresses the relationship between operating costs and net sales, and it expressed by the way of percentage. Operating ratio, cost of goods sold plus operating expenses divided by नेट सेल्स इंटू 100. आता इथं मित्रांनो आपल्याला त्याचा काही अर्थ पाहणार आहोत आपण. वेर कॉस्ट ऑफ गुड्स सोल्ड आपण याच्या आधी पाहिले नाही. ओपनिंग स्टॉक प्लस परचेसेस प्लस वेजेस मायनस क्लोजिंग स्टॉक, can say it as cost of goods sold. And operating expenses, we all know that routine expenses, that is office and administrative expenses, then selling and distribution expenses, and finance expenses. Okay, and net sales is equal to sales minus returns and allowances. Okay, then combined mixed ratios, combined or mixed ratios. There are two types of combined ratios. Number one, return on investment, that ROI. when any promoter or when any owner invest their capital into the business, it is expected that he or she must get returns over that investment. ओके, त्या कॅपिटलवर काहीतरी त्यांना रिटर्न्स फायदा बेनिफिट मिळाला पाहिजे. ओके, सो दिस रेशो मेजर्स नेट प्रॉफिट बिफोर टॅक्स and interest and capital invested. This ratio is compared to measure the overall efficiency or profitability of business. Okay, what is the formula? Let us see. Return on capital investment. Okay, we can say ROI, profit before tax, interest and dividend divided by capital employed into 100. Okay, then ROI should be net profit divided by capital employed into 100. Capital employment's capital used, okay, invested into the business. Okay, and capital employed will be equity share capital. It is for company. Okay, equity share capital plus preference share capital plus reserves and surplus plus debenture capital and other long-term loans. And capital employed is equal to fixed assets plus current assets minus current liabilities. Okay, this ratio indicates the ability of company to generate the profit per rupee in capital employed. Okay, and the second uh, thing is return on capital employed. Okay, capital employed. Capital is employed by the owners of the company or owners of the business, and they must get some returns over that capital. Okay, so let us see what will be the formula for that. Then this ratio, that is return on capital employed, this ratio measures the relationship between net profit before interest and tax and shareholders fund, and the funds are supplied equity and preference shareholders. Okay, then return on capital employed, net profit before interest and tax divided by net capital employed or equity. Okay, whereas net capital employed will be total assets minus current liabilities, and fixed assets plus current assets minus current liability. This ratio indicates whether shareholders fund is efficiently used or not. This ratio should be higher than ROI. Okay, so friends, we have studied about so many ratios which are very important in business organizations to measure the profitability, to measure the efficiency of the business, to measure whether the business is going in a proper way, in a proper position. So, okay, and once again, let us see this chart, that what ratios are there are utilized in the business organizations. Ratios: business balance sheet ratio, income statement ratio, combined mix ratio. In balance sheet ratio, we have studied about current liquid ratio, then uh, in income statement ratio, gross profit ratio, operating expenses ratio, net profit ratio, in combined ratio or mix ratio, return on capital employed, and return on investment. Okay, so all these ratio we have studied. तर मित्रांनो, आपण हे रेशो इथं अभ्यासलेलो आहोत, आणि या रेशोचा जो काही उपयोग आहे व्यवसायामध्ये तो बराचसा होत असतो. ओके, this way we are going to stop now. We'll continue in next lecture. Okay, till then, stay safe and bye.